Coverage on Russian stock exchange reopening today. Well, 30 minutes into trading, Russian stock markets resumed the trading today, and MOEX opened at about 2,479 level. It is currently trading down about 3%. And in the program for the next 30 minutes, we're going to have two guests joining us. One is Chen Jiahe, and the other one is Professor Shen Yi. They're going to analyze the repercussion and the future impact of this Russian stock markets reopening to us and also to the global geopolitical economy. Our correspondent Liu Jiaxin will also be joining us from Moscow. So let me just have our guests, Chen Jiahe and Professor Shen Yi first. Can you two hear me, gentlemen? Thanks for joining us. Okay. Me too. I can't hear it either. Right. Hold on. Right, so while we are adjusting the voice, let me just have a very quick review of past 2 days trading for you on the Russian stock exchange, as they already partially opened since last Thursday. Well, the first trading day, actually MOEX Russian index ended about 4% higher, while on Friday it closed at about 3.7% down comparing to Thursday's closing. Well, there are still a lot of trading restrictions while Russian markets partially opened its trading. For instance, Russian government is banning short selling and blocked foreigners from selling Russian equities and encouraging their own sovereign wealth fund entry into the market and try to support. So basically, Russian government is setting a so-called floor to its equity markets, and hopefully the stock trading will be held very well. But the stock is still trading down a little bit, and according to some sources that we spoke to, the sovereign wealth fund is yet entering into the market. So they're still taking a look and see the kind of attitude standing by. So let me check if our guests are ready or not. Jiahe and Shen Yi, can you hear me now?
It's not very clear.
Right. Okay. I'll try to speak slowly. But I'll try to speak slowly so you guys can hear me. Okay, great. So, Shen Yi, can you hear me? Not really, okay. Okay. Okay, let me just... Let me just quickly give you some background about the Russian stock market. Russian stock market, in terms of its total trading volume, is actually not that large. I'll give you an example. Maotai currently have about 2 trillion RMB market cap. So if you want to make an analogy, the Russian total turnover of the Russian stock market is about two Russian stock market. Two Maotai stocks, so the trading volume is not as big as what we thought. However, the repercussion is actually big because all those geopolitical impact after the stock market's reopening. Right, we're still.
From 10 a.m. to 2 p.m. Moscow time, so it already started. Earlier Russia has gradually resumed its trading of part of its stock from last Thursday on March the 24th. It opened the trading for 33 Russian companies, including like the sanctioned financial institutions like VTB and the country's energy giants, Gazprom, as well as the firms like the flag carrier Aeroflot. But before Thursday, we know that it's been closed for almost a month. And many say it's the longest pause since the fall of the Soviet Union because of the sanctions and conflict between Russia and Ukraine. but we're trying to talk to some people inside the building, but for now we are not allowed to, enter the building. And earlier there were some Russian crews here from the TV station. They're also doing live process to report on the first day of trading, the first day of the bull trading. Actually, let me brief you with the policies. The latest policy: the short selling will be banned, just as the regulator said, just in an attempt to limit the speculative bids that will cause the market into a free fall. And under a presidential decree, foreigners are not allowed to sell their Russian shares and stocks to protect. This is in a bid to protect the Russian holders' interests. And the reopening actually followed the resumption of the trading in local government bonds on March the 21st. The Russian government has pledged to buy up to 1 trillion rubles, that's an estimated $10 billion of assets, including the shares and bonds, in an attempt to stabilize financial markets. And the Russian stock market, I have to say that it crashed by more than 40% in the trading in the hours after the Ukraine and Russia conflict started. So once bull trading is now underway, but many said that our traders will be braced with an extreme falls in the value of Russian assets.
Right.
That's all for me.
Right, great. Jiaxing, I think that's very clear. Thank you for your live coverage from Moscow. Frankly speaking, we understand the Russian stock exchange in terms of total turnover volume is not that significant. However, the spirit in terms of opening the trading under this kind of geopolitical dynamics is something that we want to discuss, and also its future repercussion. So we now actually have our two guests online, Jiaxing and Shen Yi. So Professor Shen, in your mind, for such a stock exchange, which is not very significant in terms of trading volume and in terms of the company number listed globally, what is the biggest indication or significance in terms of reopening its trading under such kind of circumstances? They must be facing a lot of pressure.
Well, actually, yes, let me brief you the economic sanctions impact on Russian people's life. Actually, yesterday we went to a supermarket. For example, we saw that bananas imported from Ecuador have encountered some difficulties because of the halt of shipment of European companies. That's why the bananas are left to rot in a field in Ecuador. And also, we have seen that prices are growing, and
right.
local
Great.
people are
Thank you.
showing
Thank you. Yeah, Jiaxing, thank you.
impatience for the prices, and they're trying. They said we talked to the people, and they said they can only imagine what can they do. They have no way.
Right. We understand.
They're not qualified. We've heard the situation that they have nothing to deal with it.
Right.
So the prices are growing, the rubles are depreciating, and the economy is pulling towards Russia. But we think the next round of talks between Russia and Ukraine which is about to take place on March the 28th, March the 30th in Turkey. In Turkey, hopefully everything will get better gradually.
Great. Thank
you.
Yeah. Great. Great. Thank you so much, Jiaxing. That's all from our Jiaxing, our correspondent in Moscow. So, Professor Shen Yi, can you hear me?
Yes.
Yes. I'll just repeat my question to you again. What is the repercussion and significance that you think the reopening of Russian board now under this kind of situation, while the military conflict is still ongoing, and then the inflation is skyrocketing, and then the sell-off pressure is still ongoing?
Yeah, I think that's two very important points. First, this stable exchange market quite stable will be highly symbolic to verify whether the United States and the European Union's economic and financial section is effective or not.
Right.
Here comes already comes several challenges to those sections since Russia decided that for those unfriendly nations they have to pay ruby for their gas.
Right.
And reactions in the financial market already. You can see the different changes of ruby's exchange rates to US dollars in several days.
Right.
And the second, as you already mentioned, those developments in the financial market have vivid interaction with other financial markets all around the world. The market, those capitals are full of uncertainties and deep concern that these deeply developed sanctions and interaction between these military conflicts will raise more uncertainties and pressures to the global economies,
Right.
who already face tough pressures from COVID-19 and these pandemic things.
Right.
I think on these two sides, the reopen of this market and the future development will be very important.
Right. Well, that totally makes sense. And Jiahe, from an investment perspective, I understand that inflation will put a lot of Russian investors, jittery again, and that they would want to alternative investment channels while ruble is tumbling and depreciating rapidly. So stock market could be one of the alternatives in terms of investments. However, on the other side, while the sell-off pressure is still ongoing, how would that actually impact investors' momentum? This is one. And secondly, according to statistics, a majority of the Russian domestic board stock was actually held by foreign institutional investors. Are we still having the ban from Russian government for foreign investors entering into the market? If so, is the market efficient enough? Jiahe, can you hear me?
Okay, I think that it will be still difficult to estimate what the market reaction on this very detailed aspect.
Right.
And since European Union and the United States are cooperating closely, try to close every possible holes of their sanction systems to maximize their pressures to the most richest peoples in the Russian side. So definitely they will raise tough challenges, concern for these peoples. And maybe one possible result is they will sell out their stocks, and that will trigger a certain chain reaction in this market. But this thing is still going on because Russia's central bank and the financial institutions, it's quite clearly they're prepared for such scenarios. So they try to gather all these necessary financial funds and resources to counteract on these things. It will be a quite complicated struggles on this market.
Right. Even when all the dust settles down, do you still see the possibility of markets coming back, i.e., all those foreign institutional investors, they re-entering the market while the stock price and the volume resume? Are those scenarios possible at all, even after the military conflict ends?
And frankly speaking, I think that first, those military conflicts already entered into a very new phrase.
Right.
The Russian side already quite limited its target, and this target is more easy for them to realize comparing to the traditional ones.
Right.
And the second, if you look at the Western media, you will find out that the news outlets, they press more attention on the future development, how to solve these things in a political means and the diplomatic means. That all these things import more stable elements to this market. On the other side, definitely there will be a very long-term concrete game between the Russian side and the US and the European Union side and on these financial systems. It's kind of political game and diplomatic game in the financial and economic scenarios.
Right.
But the question is, we will concern this chain reaction not only to Russian financial market, but also to European Union and US market. So maybe finally people will become more cool down on these things and become more rationalized to tempering down their tensions on these markets.
Right. In terms of the financing alternatives for Russian stocks, I actually checked. In my recollection, I only recall two major Russian companies. They actually listed abroad in Hong Kong market. One is ticker name is 486, which is an aluminum company trading in Hong Kong from Russia, and the other one is RUAL RX, which is a nickel company trading in London and United States as a foreign issuer. But the second one actually stopped the trading already. So the first one in Hong Kong listed is still trading. So, do you see, even if Russian stocks or Russian companies, they started choosing listing abroad as their another financing alternatives, will the whole dynamics change? Do you think international boards will actually accept those Russian names going forward?
I think that's the most toughest part of the question. Because when we talk about these financial things, actually we're talking about the confidence, perceptions toward the future. It will be full of high uncertainty on these things. So I think that all sides will be treating things very cautiously and try to prefer a kind of risk avoiding policies of their first and the most important preference in today.
Right. If this financing alternative cannot happen, there's going to be a lot of difficulties for Russian companies because they will be short of external international funding. While most Russian companies listing on Russian boards are capex heavy companies in the for instance aluminum sector, in the oil and gas sector, they will need huge capex. They will need capital markets funding. So that could be potential. There could be a very big potential problem for those Russian companies.
Yes, and I think that's a kind of two-sided sword. On one side, of course, financial institutions will make these Russian companies more difficult to get funds. But on the other side, on the real economies, all these Russian companies have very special positions on the supply chain, especially to the supply chain, which is critically important to European countries and companies. So if these companies get hurt too hard on the financial side, their negative reaction and damage to the companies will have their effect on the real economies.
Right.
Fire back to European unions and the United States. So I think that will be a kind of very sensitive games and will tougher challenges to people's whether they can balance different elements simultaneously in these complicated financial and real market economy scenarios.
Right. Okay. I think hopefully these repercussions won't happen and market can be stabilized. And once this military conflict ends, all those company financing channels can be back to normal. Let me try again. Jiahe, can you hear me now? Apparently we lost our another guest. So 40 minutes into the trading of Russian stock markets, now the market's still trading slightly down comparing to its opening. We were just joined by our correspondent live from Moscow. And then also we have our guest, Professor Shen Yi, joining us from Fudan, Shanghai. So above is just a very quick wrap-up of the opening of the Russian markets. We're going to further provide you more updates in our later program. This is Kate Quay joining from Beijing live from CGTN. So we're going to keep you posted on the latest development of the Russian stock markets. Thank you very much, and thank you, Professor Shen Yi, for joining us.